Good morning, everyone. It is Insurance Mondays. And Mondays, I like to answer the questions that I've been getting on issues concerning insurance. We focus on life insurance, long-term care, keyman insurance, all the various insurance that covers the lives of individuals or their business. Again, my name is Paul Edwards. I am a registered representative with New York Life. I specialize in helping individuals, business owners to save for retirement so that they can live comfortably when that time comes, and also to protect themselves, their business, and their loved ones with life insurance and long-term care. As a financial planner, I do holistic financial planning to ensure that your needs are adequately met, your needs and also the needs of your family. So I want to quickly get into a couple of the questions I have received. And you can put your comments in the comments bar below this feed. And if I have time today, I will answer those questions because I want to make sure that my listeners are educated. You all know that I'm a Christian, and the Bible says, "My people perish for the lack of knowledge." And therefore, we have a responsibility to become more educated financially. We have a responsibility to educate ourselves on these issues. So I want to use Mondays to speak to insurance questions, and on Wednesdays I will speak to investment issues. So one of the most regular questions I've been getting is, what is term life insurance? I did speak to that last week, but I will answer that again. Term life insurance is a life insurance that protects you for a specific period of time. So it's a temporary life insurance, and you as the individual can select that period of time. You have term life insurance that we call annual term, where it protects you and covers your life for 1 year, and then you renew it each year going forward. But each year at your birthday, the cost of that 1 year term will increase incrementally. So that is what you also now have level period term, where you select a period it covers you for, say for 10 years, 15 years, 20 years, up to 30 years. And the monthly contribution is locked in for that period of time. So many individuals purchase a house and they have a 30 years mortgage. They can take, or a 20 years mortgage. They can take out a 20 years term to cover the period. That means, God forbid, the unexpected was to happen, then the death benefit would be used to pay off the difference of the mortgage without leaving that burden on your loved one. So you select the period of time. So term life insurance is a temporary coverage for a specified period of time. The premiums, the monthly contributions are generally low, and the coverage is generally high based on your age and health related and your health. So it's based on your ratings when you do the various underwriting, which will determine the cost of that coverage. So that is what term life insurance is. Another question I see here is, what is whole life insurance? Whole life insurance is what we call a permanent insurance, which covers you for your entire life, normally up to age 121. And that coverage remains in place as long as you make your your monthly, quarterly, annual contributions. The monthly contributions, the amount of you pay for premiums in a whole life policy is not going to change. So whatever the ratings you get and what that premium is going to be, it's going to be locked in for the duration of that policy. So it gives you that coverage. The difference between a whole life and the term, however, is that a whole life policy builds cash value, and that cash value is then deemed as an asset. So over time, your whole life policy builds cash value, and that cash value can be taken out as a loan, and it is also used as the surrender value if you so choose to surrender that policy. One of the beauty with New York Life being a mutual company is that the death benefit of your policy increases over time due to the growth in the cash value, and because New York Life also pays a dividends. So an individual, let us say, for example, a 40-year-old male takes out 100,000 whole life. By the time he reaches 65, that policy might have grown to 125,000 or more, because the cash value and the dividends is used to add on to the death benefit. So a whole life policy covers you for your entire life as long as you keep making your scheduled payments into the policy. Remember, you can ask any questions in the comments section below. I am here to answer that question for you. The third question is, what is a universal life insurance? A universal life insurance, the best way and the easiest way to explain it is like a hybrid between a term and a whole life. The monthly contributions are your premiums, and a universal life tends to be a little lower than the whole life. And the universal life is kind of tied to interest rates. And therefore, as you age, what happens is the cost of insurance increases. So with a universal life, it builds cash value. But as your age increase and the cost of insurance increase, the company will use the cash value built up in that universal life to pay the difference between your premiums and the cost of insurance. It is an excellent policy to have, and many individuals use it because of the cost for it, the cash value that is built up in it, and the flexible payment points that is used with a universal life policy. So these are three good life insurance policies. The important thing is you must meet with a professional like myself, and they will go through in more details to you, and they will help you to select the best policy that is right for you. Another question I see here is, why should I have life insurance? I call a very good question. I call life insurance love insurance. What do I mean? When you are alive, if you are married, and even if you are not married, you want to make sure that if something was to happen to you, you are not going to leave any financial burden on your loved ones that is left behind. No amount of insurance can replace you. However, most times when a loved one passes, not only do they lose you as a person, they lose your income. So you want life insurance, love insurance to replace your income to the benefit of your family. And the final question I'm going to answer today is, how much life insurance should I have? And a simple rule of thumb we use, there's a more detailed way to calculate the right amount, but we use a simple rule of thumb where we say 10 times your income. So if you are earning $200,000 per month, you and your partner or you alone, you are looking at about 2 million. 100,000, you are looking at 1 million. And 50,000, 500,000. 24,000, 240,000 as a rule of thumb. But when you meet with us, then we will use another method to come to the desired or the right amount. Remember that if you are a 30-year-old, 40-year-old, let us say you are 50 years old, and let us say you are married. I'm going to use 100,000 for the calculation. And you are bringing in 100,000 into your family. Your wife or your husband, if you work for the next 15 years, you would be bringing in 1 million into your family. Therefore, with love insurance, life insurance, we say protect that million that your wife would expect you to bring in. Protect that million that your partner would expect you to bring in by having a life insurance policy. Let us say a minimum of $1 million, that if that was to happen, your family would not have to struggle. The key thing is, I do believe you should have life insurance. You should have love insurance to protect you and your loved one so that no one is left behind struggling if you are not here. I've shared the story and I'll share it again. I know of individuals who are no longer here. I've had clients who are no longer here, and their absence have caused great financial burdens on their families. Don't let that happen to you. You love your wife, you love your kids. Put in place a proper life insurance to protect them if you are no longer here. Again, you can put your comments and I will answer your questions on my next week Monday when I do Life Insurance Mondays. You can call me at 321-557-1155. My name is Paul Edwards, where you can schedule a face-to-face or a virtual meeting, and I can answer any questions you have. Have a blessed, productive day, and remember, have adequate life insurance in place to protect you, your loved ones, and family.